Welcome to Seeking Alpha Editors Roundtable. What moved markets this week for the week ending November 12th, 2021. Stocks are down a bit for the week. There was not all that much going on this week, but we did have an inflation report that came in hotter than expected, and that caused a sell-off, which we have yet to recover from. There was quite a bit else in terms of data releases and, of course, earnings, which I will get into with the panel now. And they are in no particular order: Brad Olison, the VP of News; Kim Kahn, Senior News Editor; and Stephen Alfer, Managing Editor of Breaking News. So let's move on to Kim and let him start us off with what moved markets this week.
Yeah, as you mentioned, the inflation was the big story and was just reverberating around the different markets, as well as all the political discussion of what it meant, with the CPI coming in above 6% for the month. And you saw a lot of impact in the bond market with the yield curve flattening. It was the shorter end of the curve moving up that was doing the flattening. The 5-year yield has moved up 20 basis points this week, basically with all the traders pulling in their rate hike expectations. Wells Fargo out today saying expects 2 rate hikes next year, followed up by similar hikes in 2023. So there's a lot of signals that the Fed has to do more on the inflation front.
Let's go to Brad.
And just because we had rates spiking doesn't mean the end is nigh near term. But I will point to the Bank of America report talking about when the 10-year yield does spike more than 50 basis points or more in a month, like we've seen recently. There does tend to be lackluster performance in the S&P 500 going out about a month and a year from that moment. So we may not see all of that damage fully break through to the equity markets just now, especially like you said, Nat, a heavy earnings week. But talking about that, I guess earnings themselves are the winners. Basically, what we've seen in some of the sell side research, Morgan Stanley and Barclays both see strong earnings outlook as a tailwind for equities long term. But obviously, there were some one-offs, some big moves this week. Beyond Meat was a big loser. You also had PayPal, which lost a lot of its market cap after a surprise miss there on some of their outlook. But non-earnings related on the upside, we saw that breakups were kind of the news du jour, right? GE deciding to break up into 3 separate parts, Toshiba also deciding to break up its conglomerate, and then J&J, just the most recent, with shares popping there in response. The other big winner on the upside, Tapestry. That's one of the few retailers that's done extremely well despite supply chain bottlenecks. They do have heavy exposure to Vietnam, but it looks like they have kind of moved a lot of their sourcing away from areas that have been deeply impacted by the supply chain. And also on the upside, the infrastructure bill passed, which gave a lift to some miners and industrials like Freeport-McMoRan, CF Industries. And then I guess less positive, but good for equities, you had Laboratory Core and Quest Diagnostics. There was some M&A chatter in Laboratory Core. These are testing companies, but we've also seen some reports here and there in Europe and also in the western part of the US about some of the Delta variant popping up. So testing volumes are rising. But the biggest loser, I guess, in terms of the news flow and also just in terms of pure percentage losses, was going to be Tesla. It was one of the biggest winners last week. It helped the consumer discretionary industry or sector, rise rather considerably, but its losses this week in the double digits on the back of selling from the CEO, a lot of press around that, definitely just kind of weighed on shares there.
What else was going on in the corporate world, Stephen?
Twitter continues to languish, and to pick up on the Elon Musk news, right? The sales were announced via Twitter, or kind of announced, right? Saturday, he put out, like, I'm going to do a poll here. If everyone thinks billionaires should pay more taxes, I'll sell some Tesla stock. If everybody says yes, and he left the poll open for whatever, 24 or 36 hours. And
I'm glad you mentioned Twitter, though, because I have a poll on my Twitter. Bill Ackman versus LeBron James, who you got? And at the time of this recording, Bill Ackman is winning 77% to 23%. So, but there's still time to vote. So you can do that.
I wrote
I
in
think
Elon Musk on that poll, by the way. So.
All right, let's move on to the second segment of the show where we discuss our favorite stories, Seeking Alpha articles, tweets, not our own tweets, or other things that we have seen in our travels. And let's start with Kim.
I'm going to take a look at the stock Funware. It's a ticker PHUN, which in my opinion really lives up to its ticker if you like memes and trendy trends and everything that goes along with that. It's a small company that does applications, does some computer peripherals, and it reported earnings this week. Earnings are kind of beside the point, but they did turn a profit. It's got notoriety recently because of the Donald Trump Media Group SPAC, DWAC. It kind of had a halo effect and soared at one point more than 1,500% on the day because it had been involved with the campaign and making an application for it. So then that kind of faded, but then it bounced up, and it's still, you know, well above what it was before that surge going into earnings, because it's buying Bitcoin and just putting it on its books, even though it appears to be buying pretty much near the top where Bitcoin is. But if you dig even further into this stock, it's like it's got such great meme credentials. It went public via SPAC in 2019, well before anybody was talking about it. As soon as it did go public, it soared to over $300. It's now at $3. It's sort of over $300 on a short squeeze that was like the level of GameStop. And we have an interview on Seeking Alpha with the CEO explaining how Wall Street banks at the time were calling him saying, "We can't buy your stock. Our market makers have stopped us from submitting buy orders," which is exactly what happened with retail investors with Robinhood. So I think it's a fun stock to look at, and also a great interview if you catch it on our site with the CEO, where he goes into the whole meme thing, why he's buying crypto, and also defends a lot of criticism on his balance sheet.
Very interesting. Although a reminder that just because something looks like a meme stock doesn't mean it will become one, and vice versa. I mean, who could have dreamt that a retailer, a bricks and mortar retailer for video games would become the meme stock of the year, basically. But anyway, Brad, what about you?
Well, what about a bricks and mortar movie theater?
Yeah, exactly. That's another example.
That will be my story of the week with AMC's call, and Steve's smiling. I hope this is not his favorite story, but the same themes I think are at play here, right? Crypto exposure with AMC on the call, on the earnings call. The CEO talked about how they're going to be accepting various crypto payments. They also are looking to sell some of their popcorn.
So yeah, what about your favorite story, Stephen?
The iHome buying story. Zillow's been eviscerated because they failed to execute on that. Open Door reported earnings this week, and they're doing just fine with it. And the stock had a nice week. Open Door over the last 6 months is up 30%, while Zillow's down nearly 50%. Open Door, of course, was dedicated to kind of this iBuying model from the start, where Zillow kind of went outside maybe their circle of competence and got into it later. So it suggests maybe just, the DNAs of the two companies were a little bit different, and maybe iBuying can work as a model. Maybe, and Zillow just kind of like blew it.
And for me, I am once again going to draw attention to our Pros subscription service. This is where we highlight the most actionable and interesting Seeking Alpha articles that come in from our contributors. And this is a subscription service, like I said, where I spend most of my time these days. And there was a piece here by Joris Giesendorf, and I believe I pronounced his name correctly, about Turkcell, the Turkish telecoms company. And he is bullish on this stock. It has dropped precipitously over the last year or so, mainly out of concerns about Turkey itself. Inflation in Turkey is running rampant, but he points out that this company's pricing is basically pegged to inflation, and also that Turkish GDP is showing some substantial growth now. So this is kind of one of these contrarian buy the dip ideas that I like to find and locate and highlight for the readers, the Pros readers.
So anyway, in Turkey, Steve, their central bank lowered rates in the face of their inflation. So there's that. We could have that alternative as well.
Yeah, that's going to work out well.
Under orders.
I can see the Fed doing that. Yeah. There's too much inflation, so we're going to lower rates. Right. More QE. All right, then. Well, with that, we wrap up this week's episode. Thank you all for watching and listening. If you are listening, remember that the video airs on Friday afternoon, right around the market close, 4 p.m. on the website seekingalpha.com. And the slightly longer audio version is out on Saturday morning at 6:30 a.m. You get that through the Wall Street Breakfast podcast account. And with that, we sign off for today and wish you a happy and healthy weekend and look forward to speaking to you again next week.